Good afternoon. Welcome back to the channel. Hope everyone is doing well. We've had a pretty crazy week. So, without further ado, let's just go ahead and dive into things. We got a pretty darn busy week ahead, especially on the earnings front. As you can see here, we do have pretty much most of the major players reporting earnings this week, starting with Meta, Microsoft, and Alphabet all reporting on Wednesday after the bell, and then on Thursday after the close, you got Amazon and Apple, not to mention everybody else in between. We're talking about UPS, Visa, you got Coinbase, you got Reddit, yeah, beat up name like Chipotle. Dow leader Caterpillar reports on Wednesday. You got some energy names such as ExxonMobil and Chevron. Yeah, I mean, this is the be all kind of weeks, whatever that means. Just an absolute slam pack week as far as earnings reports. I'm not going to do a deep dive on those, but you definitely want to have that situational awareness, especially Wednesday and Thursday. And we're not even mentioning here the fact that on Wednesday, I mean, we might as well just throw in Jerome Powell and the FOMC and Fed rate decision. So, pretty darn eventful week, needless to say. Yeah, we're going to have to see where things go. The market's been on an absolute rip despite a little bit of a failed bull flag breakdown. I mean, it's just been, the bulls are completely in control, and we'll get to that in a second. But yeah, I mean, we did finally get some economic data last week. We had our CPI come in cooler than expected, 3% versus 3.1%. Remember, the government shutdown is, preventing a lot of the data points to come out. So we'll see if this sticks or if it's revised once the government does decide to open up and they finally can get back to work. But, when it comes to the Fed rate decision, yeah, we'll see if they're able to come to a consensus on if they want to continue to decrease rates or if they want to continue to hold steady, especially with the government shutdown. To me, that route makes sense because they are only working with so much data that they can control. So yeah, we'll see. Let me see here what the rate cut probability is just on the CMEs real quick, and we'll go from there. Yeah. All right. Well, we are expecting a rate cut then for this meeting, a 96% rate cut. So, yeah, I mean, so much for that. But yeah, expect a 25 basis point rate cut. That's the probabilities that we are seeing. And I guess that is mainly due to the weak labor market. We continue to see some slowdown within the labor market, and especially as long as the government shutdown continues, a lot of those federal workers are, pretty much SOL. Sadly, a lot of people are struggling right now with not getting paid. But, with all that being said, I'm not going to get into politics of all of that. Just be mindful of what's going on. Be sure to review this calendar for the week ahead and just be aware, have that situational awareness of what's going on or who's reporting before the bell and who's reporting after the bell. This is like the Super Bowl week of earnings, so you definitely want to just be mindful. All right, let's just go ahead and deep dive into the charts. I'm going to take a quick peek here. This is the S&P futures on a 15-minute chart. We can see from last Friday, or the previous Friday, on the 17th, we ran about 200 points, right? Let me get a marker here. We ran about 200 points from this low, and from there we formed a bull flag. Now, this makes sense. We get some sort of consolidation. We had about a 2-day consolidation before having our breakdown. The bull flag did not break to the upside. We broke down. However, bulls did step in around that 66.90 mark. And from there, we have just shot straight back up. Bulls came back to control this 67.66 level. This was the bull flag base, and that's all the market bulls really need to do to regain the momentum and the structure of this market. And since then, we have been an absolute rip. Now, due to all this, let me get rid of all this because I don't need that clogging up my chart. Here's our CPI print on Friday. We just absolutely blasted off, and then we just kind of stutter stepped for the remainder of the day. It was a rather boring Friday session. So what I'm looking at here is if we start to fail 68.20, 68.18, give or take, then sure, we can come in. This is based off of the base that we formed during the Friday session. If we do break down below that, then I am looking to see if we can hold the CPI breakout base. So, this is that 6,800 to about 67.93. If we pull back, I do expect this to hold. However, it doesn't have to hold, of course. If we get a deeper pullback, then sure, we can zoom out and, just, see what's happening, or what has happened in the past. If we get that deeper pullback, I will want to see bulls to pretty much hold that bull flag base, which was pretty much our battleground for several days last week. After that 200-point push higher, we based out, and then we broke down below it. We retested it and finally got back through it, and that's where we pushed higher. So I do want to see this like 67, 66 level hold if 6,800 does decide to break. And from there, I got a key few points down here. But overall, market bulls continue to really hold things together, and we can see this just by looking at my readings here based on what I'm looking at. Everything is in a bullish alignment across the board as far as the SPY, the QQQ, the Dow, and the small caps. We do still have a few mid-grade level squeezes on the daily time frame, so that is definitely something that we can keep an eye on. But overall, the index complex does present broad-based bullish alignment, and there's no meaningful divergence within this group, and all the major ETFs here are pretty much moving in the same direction, and that does give me solid conviction and full confidence in this market with a risk on mindset. So buy the dip mentality continues to be the nature of the beast. Now, we of course can break down. Of course, we got headlines left and right. China and the U.S. continue to battle it out, even though I saw a recent headline just a few moments ago that China and the U.S. have reached some sort of consensus. You got the whole U.S. and Canada situation that has upticked due to the whole Ronald Reagan video thing. So Donald Trump is looking to increase Canadian tariffs by 10% because of that video that was aired during the World Series game. So, it's the world that we live in, But yeah, I mean, this is just a strong bullish market. And, even when we have crazy dips, they just continue to get balled up, and we are getting into the heat of the moment with earnings. We're getting the FOMC. So just be mindful. These levels, of course, they don't necessarily have to hold. We can just absolutely flush. Now, if we do flush completely, bulls are pretty much going to be in control up into about, let me see, it's not until we get down to like 6,600 really that we start to, this is the low that I would want to break. If we start to lose like 65-70, that would spill, that would not be good for market bulls. This is when I would turn my attention to maybe more bear side matters, but for the most part, this market continues to, rip face. I mean, you could argue even all the way down to 64.40, but 65.70 is probably my line in the sand that bulls need to continue to hold. So that's where I'm sitting at right now. I don't really have anything negative to say about this market, but off we go. Let's look at a few scans that I've been looking at. Of course, going to continue to pay attention to Mag 7 names such as Apple. Apple continues to be pretty solid. I'm still holding some contracts here. I'm still looking for a push towards 270. We still based out. We held 257, and now we're looking to push through this 263, 265 zone towards 270. We'll see if we can get that. A lot of these semiconductor names look really good. AMAT, AMD had a fantastic breakout on Friday. ILMU also had a pretty solid day. LRCX continues to be impressive. Intel had great earnings. You did get some profit taking off of that, but we'll see if it continues to rally to the upside. And Intel's just been pretty impressive these last few weeks, to be honest with you. You do have Caterpillar reporting earnings. This has been another strong bullish trend. Getting a little bit of a pullback, but this thing can move back up to 545 pretty easily. You got names such as CRH, continues to hold this base of about 116 with an overall target of about 123, 125. That is something that I'm eyeballing to get back in. You have EA is a buyout name, so I'm not going to really pay too much attention to that. CVS, again, looks really good. Johnson & Johnson. Let's see what AbbVie looks like. AbbVie has earnings this week. Let's see, AEP continues to look pretty good. AEP needs to hold 115. If 115 holds on AEP, then we're looking for a move towards 120. Google continues to be impressive. I mean, breakout over 257. You're now trading close to the 260s. Netflix is the concerning one, to be honest with you. We did get that breakdown below 1,100 now off of its earnings miss. They missed by about 15%, even though revenues were pretty good. This is definitely one to kind of keep an eye on. Is this going to set this tone for, some of these other major players? But yeah, this is not looking good here. Losing 1,100 on Netflix. The next key area to test is really this 1050 mark here. 1060, 1050 is where we are going to look at. So Netflix puts could be a little interesting. I'm not going to lie. We do have Tesla as well. Tesla's just been impressive. It continues to hold 415, 420. As long as Tesla holds 415, I think you're in good shape. But if you start to lose 415, yeah, look out below. So that could just be another thing to keep an eye out on. Amazon, yeah, despite the AWS situation that we had last week, where pretty much the entire internet was down, apparently that was bullish, and we've been moving higher since then. So if Amazon wants to continue to push upward, look for a move to about 227.50. Once you get above 227.50, that can reintroduce higher prices to about 235. So that's something to keep an eye on for sure. Let's see, semiconductors, like I said, just continue to be doing pretty good. Industrials, all-time high breakout, didn't close over it, so we'll continue to keep an eye on those industrials. I mean, you had Boeing starting to look pretty good. I mean, everything, UNH is starting to try to wake back up again. You're starting to build this base around 350. If this can continue, yeah, I mean, there's lots of this low volume moves that we can just absolutely rip through. So I'm definitely keeping an eye on UNH on a weekly basis. I mean, you name it. I mean, there's tons of good names out there. Walmart still looks pretty good as long as it holds 105. Let's see, you got Western Digital, another, solid name out there. I mean, tech in general just looks pretty good. Utilities continue to look strong because you need that AI infrastructure, and utilities is going to pretty much lead the way. But all right, again, here's my S&P futures chart. If you need to screenshot it, there you go. Again, we ran 200 points, set out that bull flag, had that breakdown, failed breakdown really, and bulls held the line and pushed us back to the upside. If things continue to push to the upside, I'm looking for a target of 6,900. Just keep it simple. We might get some resistance around the 6860 mark, but really 6,900 is going to be all eyes on there. Again, big earnings week, big day on Wednesday with FOMC and Jerome Powell to be mindful of. And yeah, let's just take it one day at a time, be mindful of those earnings, and bulls remain in control. So there you go. Congrats bulls, congrats longs. Buy the dip mode continues to be the situation. Watch for those failed breakdowns and play to the upside. All right, guys, that's going to be it for me. Enjoy the rest of your Sunday. Go watch some football. It's kind of rainy here, so just get cozied up, I guess. Do some housework. All right, guys, have a good one, and I will see you all on the next one. Take care.